Okay, everybody, here we go. And I mean, here we go. It is Monday, March 13, 2023. People, you watching this? It's incredible what we're seeing right now. So last night, the Federal Reserve made an announcement that they are now implementing emergency measures. That's their words. Emergency measures to stabilize the banking issue that we have here, that they created, of course. None of this is a surprise to a single person here. So what's part of this emergency measures? Are you watching the bond market? Massive amounts of debt buying here. The U.S. 10-year yield just from Friday has dropped 25 basis points. That's pretty substantial. And we'll see where this goes today. It could go much lower, who knows? We also got the relative strength of the dollar dropping. So there was no fear trade. Meanwhile, you got stock futures this morning much, much lower. Initially, when it was announced last night that the Federal Reserve was going to implement these emergency measures, stock futures were up by 300 points. Right now, Dow futures are down by 300 points. And this market is slated to drop at the open. And just to make this even better, I'm laughing. I should have laughed. In about 10 minutes from now, our illustrious, very nice president, who doesn't know what the hell is going on at all, is about to make some kind of speech about how strong the U.S. economy is, how strong the banking sector is. You see, to me, that's the kiss of death. When they got to parade out a sitting U.S. president to sell you yet again another lie, I don't think this market's going to like it at all. And just to push that point home, in anticipation of what it's going to say in roughly 10 minutes from now or so, stock futures are again down big time. Cryptocurrencies are catching a bid this morning. Bitcoin, I keep saying Batcoin. Maybe we got to create a Batcoin. Bitcoin back over 22,000. Gold and especially silver catching a nice bid right now. Crude oil getting slammed, and the market isn't going to like that at all right now. The MMRI is at 223. Why is that happening? Well, two reasons. You know it. It's massive, and if I didn't say the word, massive amounts of debt buying by the Federal Reserve right now. This is obviously quantitative easing in our face. And this falling off of a cliff of the U.S. dollar on a relative strength basis. Look, there is a systemic problem going on here. We are in a systemic meltdown, in my view. And this is, exactly what you and I would have expected to see. For how many, years have I told you that things are going to get much, much worse, despite what the stock market was doing under the last president here? And look at the economy, it was so strong. Look at the stock market, and then we hit new highs under Bidenstein, which that is not looking too pretty right now. Again, and this is deliberate. Massive wealth transfer effect going on here. Elimination of an entire class of people. That's not going to stop. There is a big question whether or not the Fed's going to hike rates at their next FOMC meeting on the back of what's going on here. If you recall, at the end of last year, I said there would be a pause, more than likely early this year, and maybe the Fed will use this as an excuse to pause, but I don't know. We're going to see tomorrow. We get the CPI number, which I'm expecting is going to be abysmal, but of course they're going to tell us it's really great. And we'll see what the Federal Reserve decides to do with regard to a rate hike. I still say we're going to get a 25 basis point hike here. At the same time, the Federal Reserve is going to be buying a lot more debt. Now, we'll see what else happens today. Again, this market, as I am doing this, stock futures are down pretty much across the board. And there's really not a lot of fear here, which is interesting, because how do you know that? How do we know the fear trade? Because the dollar is substantially weaker. The last time I looked at it, the relative strength of the dollar, or the comparative strength of the dollar, was down 0.55. Generally, when there's just a good old-fashioned fear trade, you get the knee-jerk higher in the dollar. We're not seeing that. We're not seeing that this morning, but we are seeing a cratering of the 10-year yield and a cratering of the MMRI on the back of that. Let's see what they pull off. Let's see if they can drop the 10-year yield another 25 or 30 basis points in 1 or 2 days. And who knows, maybe the MMRI will drop into the, not so risky zone right now. That's what they're going to try to do. You see, they're going to use the stock market again as a weapon. If people believe or see the S&P 500, the NASDAQ, the Dow higher, then they believe everything is just okay. So all the Fed needs to do is put some freak behind their trading desk and start buying large cap stocks. Start buying the big banks. Okay, look for that. In order to restore confidence in the system and foster their current plan is very simple: to consolidate power. I wrote a whole piece on this. I discussed it yesterday in my Markets A Look Ahead segment, if you didn't see that. So the Federal Reserve, this is deliberate. Understand what we're seeing here. The Federal Reserve, by aggressively raising rates over the last many, many months, had nothing to do with inflation. They had no intention and still have no inflation, zero, to slow inflation. What they wanted to do was kill the economy by crushing the consumer, and this has worked. What this is also what's happening here, obviously, is a consolidation of power in the big banks. The big banks don't want the competition. Again, even for the big banks, no deposits, no loans, no deals. What better way to prop up the big banks than to allow to happen failures of the regional and smaller banks, so the large banks could get their assets for next to nothing as their assets go to auction. That's exactly what's going on here, in case you don't know, with regard to SVB, and it's going to be other banks as well, which have also failed here. This is not over. This is not over. And people are going to start pulling their cash out of these institutions in throngs, in waves. So that's also going to add to the woes of these smaller regional banks. This is going exactly to the plan that the Federal Reserve, along with the U.S. Treasury, has set in motion. Why do you think? Do you really believe that the banking regulators, which had no idea this was going to happen, they just were completely taken by surprise? No way did they not know. You and I knew, and this is just the beginning. We are in this is just the early stages. I want you to consider what I'm saying. We are now witnessing the early stages of a systemic breakdown. This whole thing has been designed to break down the current system. And with regard to a public outcry, you haven't seen anything yet. They need a massive, we're talking about off the Richter scale, public outcry where people beg for help. Please, big government, step in and help us. We need a solution, okay? Problem, reaction, solution. Problem, they're allowing this to manifest itself again. The raising rate environment here as the economy is collapsing on a global level. This is designed again to crush the economy, kill the consumer. Okay, they allow the problem to manifest itself here. Reaction, help. Solution, don't worry about it. We have a solution for you. They got to take down the current system to implement their new system. Okay, this is just a part of it. But the outcry is not great enough yet. Hit people in the pocketbook, and then they open their eyes. You see, this may wake up some people, but it's too late. Again, they already have, the central banks, especially the Federal Reserve, being that the U.S. dollar remains the world reserve currency, has a stranglehold on the world at this point. They're the enemy. You know that. They are public enemy number one. How many years have I said that to you? Now do you see what I'm talking about here? Really? The regulators, the U.S. Treasury. Do you think it's any coincidence that the current U.S. Treasury Secretary happens to be a former Federal Reserve chairperson? I'm talking about the other thing, vomitous mass, whatever it is, Janet Yellen Stein. You understand? Anyway, people, look, this is getting interesting, at least for me. Our illustrious, beautiful president, I'm just lying here, I want to vomit, is about to speak in about 3 minutes. So I'm going to end this video so you can listen to it. And let's see what the market does. Let's see how stock futures respond. Let's see what happens in the 10-year yield. Let's watch the MMRI. Link in the description of this video. People, I'm going to urge you to sign up for subscribe to my free newsletter. There is a link also down here in the description of this video. I'll blast stuff out all day. All right, so I'll keep you on top of this. And later on today, we're going to resume the festivities with my live stream. Don't miss it. 1:05 p.m. Pacific Standard Time. We're going to have a lot to talk about. Love you a lot. Please share the video. Let's all get together and watch the thing open up its pie hole and hear how many lies are going to come out of its mouth. Remember, our economy is strong. Our banking system is extremely strong. You know how he knows that? Well, because he's being told to read a script. Duh, duh. And can I please get another duh? See you later.